Hi and welcome back to Cheeky Crypto. My name is Nick and today guys, we're going to be jumping into Bitcoin. We're going to be taking a look at the Wyckoff accumulation pattern. Someone sent me something interesting yesterday and I thought it was important to take a look at it in some detail, draw out what I think a Wyckoff accumulation pattern should look like and compare it to what was sent to me, and then leave it to you guys to decide which one you think is more accurate. So as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, guys. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? As I said, linked in the description below. Right, let's jump right down into this thing, right? So this is what was sent to me. I don't know who it's from, where it came from, and all that kind of usual stuff. It was just shared in a Discord server. Basically, it's a Wyckoff accumulation pattern. Now, straight off the bat, my issue here is that they're only looking at one schematic. There's actually two that I'm aware of. One that has a spring event, one does not have a spring event. And then, of course, you can see how they've drawn it out. They want to be in phase D going into phase E. And I don't think this is possible. It's not possible because the secondary test in phase B did not go down lower than the selling climax of phase A on the schematic down here, right? So you can see on the schematic, this area is lower than the selling climax, and you can see the selling climax is the low. In fact, it is the lowest point until phase C. This is basically trying to make something fit because your bullish narrative, right? This is basically not letting the data dictate whether you should be bullish or bearish. This is just saying, I'm bullish, how do I make it look bullish? And ignoring the secondary test in phase B. In fact, they've even removed it from their schematic drawing. So this is what they actually should look like. I can zoom in on this a little bit and see if this, no, it's not gonna make me. So this is the one that they're looking at, right? And what they've done is they've ignored the secondary test in phase B that is lower than the selling climax. They just omitted that from their drawing, and then they've just gone straight onto the spring event, right? That's what they've done. And I don't believe that that's a very fair thing to do. It's very misleading because people will believe that that's what's going on and they've had the spring event and all that kind of usual stuff. So that brings me on to, okay, if we were to draw this out, where would we draw it, right? And I'm not confident in thinking that there's a schematic here that's actually playing out. There are two variations, one without a spring event and one with a spring event, but secondary test in phase B always remains lower than the selling climax, okay? So if we were to try to make this fit, where are we, right? And I did this a couple of times already, trying to see if whether a Wyckoff accumulation pattern does fit this, does fit Bitcoin, or whether it does not, right? So we're on the daily time frame, and maybe we have to look at it on a different time frame. I don't really know if it matters terribly too much at this point. Daily is pretty good for this. So if I start drawing some horizontal lines, the first thing we want to do is we want to know where our low is. Our low is right down here. Okay, so this has got to be either a spring event, secondary test in phase B, or a selling climax. That's what it is, right? It's going to be one of those three things. And it's possible that this is a secondary test in phase B. Okay, it's unlikely that this is going to be the selling climax. Could be, but it's unlikely that it is, okay? Now, if I come up into this range up here, we can see that there is a preliminary support to be found. And this preliminary support should also be just up here after the secondary test of phase A. Okay, so let's just kind of run with this for a second, right? So if we're looking for support, I'm going to try to label it up right about there. You can see this is also being resistance up here. Okay, so you can kind of see that this support area is now a resistance area. It's not perfect by any stretch of the imagination. It's not like you've gone straight to the penny and it's bounced and rejected, etc. So it's a rough area. Now, if I come down here, that would make this one a selling climax. And what I can do is here is I'm gonna label these up so that we can get a good idea on what these are, right? So that is our selling climax. That would make this one down here our secondary test in phase B. So let's go ahead and throw on secondary test in phase B down there. That means this one is our PS, preliminary selling, preliminary support, sorry. So if I come into here and put that into my PS, there we go. So we end up with a PS, selling climax, and a secondary test in phase B. So then what do we see here? Well, we'd have to have an automatic rally. Okay, we then would have to have a secondary test and then another rally upwards. It's in fact possible that this area, so let's see, we would have to have this maybe here, and then here. Be interesting. Let's see. Would be strange to think of it like that. So like I said, I don't think this really fits overly well, but we'd have to have that one there as our automatic rally, which would be unusual. I mean, we could probably put it a little bit lower, but it would be terribly unusual to do that also. So let's go with it being here for now. Again, not a good fit, not a good fit at all, but that's your AR. And then if we draw another horizontal line up here, this will be our resistances. And you can see that we've already pushed up higher than this. And that's really where this thing starts to fall down. Because how can we possibly have had a secondary test in phase B and then come up higher than our resistances? It just wouldn't have happened. So our resistances are up here, which basically means that this has to be something else going on, entirely, and not a Wyckoff accumulation pattern. It just doesn't fit. Okay, and we can try to kind of roll backwards, and we can try to make things look like they can fit. Maybe this is a secondary test in phase B, and we haven't rallied up. But there's nowhere on this chart for Bitcoin that I can see that a Wyckoff accumulation pattern now fits. We were tracking it, but until this recent surge upwards, I think we've completely invalidated it. Okay, so as I had this drawn out before, we had no secondary test in phase B. That was yet to actually occur. Okay, so the only other way that looking at this at the moment is that down here is our selling climax. And our automatic rally is up here. And our resistances are right up here with the preliminary selling. Okay, so that would basically mean that we are up here on the schematic, right? So let me just make this a little bit easier to read. There we go. So we are basically just up in this resistance line at the top after a secondary test. Let me draw that in down here. And this one would be a secondary test of phase A. Okay, that basically means that we are now in phase B, yet to actually see the secondary test in phase B. That's the only other way I can see of getting a Wyckoff accumulation pattern to work. Other than that, there is no other way that I can see of getting a Wyckoff accumulation pattern to actually fit to Bitcoin. So when we take a look at this and we can see, okay, we've really tried hard to make this work, you haven't actually adhered to the actual schematic, and then you've removed the text from it to try to make it work. So to me, it doesn't look like this is anything more than maybe if we are following this pattern, we're in phase B, yet to actually come down into those lows of the secondary test of phase B, meaning that we should be looking at a big move down here, okay, before we then start to move up again, okay, where we'd move up just above the automatic rally and then fall back down. And then once we get into this next stage is whether or not we end up with finding support down here, okay, and then rallying up, or whether or not there is going to be a spring event, which will happen to take us down a little bit lower. There's two schematics, okay, so the schematic number 2, there is no spring event, okay, and schematic number 1, we have the spring event. Okay, so we can see that right in there. So the only way I can see that this could possibly even remotely fit would be for us to be in a phase B situation right now, and not a phase D or E kind of situation. So to me, it looks, if we are following this, which is a long shot in my opinion, then we have to go down into a new lower low, which would be the secondary test in phase B, which would be lower and has to be lower than the selling climax of phase A. So, it is what it is. So it'll be interesting to kind of see how that plays out. Like I said, I'm not an expert on Wyckoff accumulation patterns. Literally just follow the pattern and follow the data. There's great articles online about Wyckoff accumulation and Wyckoff distribution. And essentially there's always a variation to these things that mean that the institutional market makers, billionaires, that will win, right? They go after the liquidity, essentially, that's what it is. It's a manipulation pattern, which means there's multiple different patterns, different schematics, if you will, that allow for retail to kind of lose, okay? So understand that they're just going to go wherever the money is. That's why you see these two patterns here, one with a spring event and one without a spring event. It depends on where the money is. If the money is higher, then they're going to go after that, and then too many people are shorting the market. If too many people are going long on the market, you can expect yourself to have a spring event, because that's where the money is. It's going to be down lower in the price charts. That's where the liquidity sits. So knowing these things helps you understand, okay, just follow the data, follow the money, and you should be in an okay position. Okay, so Wyckoff accumulation pattern. Let me know what your thoughts are in the comments down below. Do you think that we are coming out of this thing? And if so, if you think you're in a phase D or phase E, please explain to me how, so that I can chart that up, because I would love to be able to think of Bitcoin in a bullish way. I just can't see any data that really gives me that bullish vibe right now. And let me know if you think actually, this makes the most amount of sense, that actually we're yet to have a phase B if we're to follow this schematic at all. A secondary test in phase B, and if we're even following the Wyckoff pattern. Let me know in the comments below, where do you sit on the Wyckoff side of things? Do you think that the spring events happen? Do you think that actually the spring event is yet to happen? Do you think there will even be a spring event? And what kind of price do you think Bitcoin is going to within the next 3 months? These are some interesting things that would be great to kind of canvass the community's thoughts and opinions on. So let me know as well in the live chat there. Guys, I'm going to wrap this one up. If you have found it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, guys, linked in the description below. I don't think you'll regret it. Until the next one, have a fantastic day. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.